Card guy says he originally owed $16,000 from stocks. He sold those stocks at a short-term gain in 2021. He now owes $23,000 because they've tacked on penalties and interest in addition to the $16,000. Anyway, the money that he made in the stocks, he reinvested it. So the $59,000 he made from the sale of these, or he had from the sale of these stocks, he reinvested it into two crap stocks that are currently worth $1,000. He says, I've never been one to owe money to the IRS, but I need some help or advice on how to pay the $23,000. Anything I can do? I have a 3-year-old and this is eating at me every day. Thank you so much for any advice. Just a stressed out dad. Well, card guy, from one stressed out dad of a 3-year-old to another, let me say you do have options. First thing I would look at if I were taking your case is getting the IRS to forgive some or all those penalties on your account. You say that you have never been one to owe money to the IRS. This sounds like this is your first rodeo with tax problems, right? The fact that this is eating at you every day, it sounds like you haven't been in this position before. What I would do if I were taking your case, first thing I would do is try to get some penalty abatement. Hey, this is card guy's first time, at least in recent history, that he's owed you guys anything. Can you abate some or all those penalties under first time abatement, right? See what they say. Let's say, they wipe out $3,000 of penalties. Now you're done $20,000. I assume you don't have this money to just pay, right? Otherwise it sounds like you would. So what are your options? It's the normal, typical tax relief option that anybody who owes $20,000 would have in this situation, right? 3 major tax relief options. 1, installment agreement. Right? You call up the IRS, they're going to probably want a lot of money in that installment agreement. You can negotiate with them to get that installment agreement lower. It might even become a partial payment installment agreement. Link to a video about partial payment installment agreements, PPIs, here at the top of the screen, whereby the amount you pay them is so little every month that the sum of all the payments you make to them until your tax debt drops off at the end of the IRS's collection statute for this debt. Right? So if it's a 2021 tax debt, you file the return, let's say in April 2022, probably assessed in May 2022, right? That the government has until May 2032 in that fact pattern to collect that debt, right? So if you're paying them, $50 a month, right? That's like $600 a year for the next, let's say, 8 years, right? That's less than $5,000, right? That you paid them on $20,000 tax debt. The other $15,000 gets written off. Okay, that's a PPI, partial payment installment agreement. You got to prove it to the IRS. You got to prove to them, based on your documents, based on everything, based on how the IRS calculates your disposable income and your equity and assets, that this is all you can afford to pay, right? There's current non-collectible status. That's where you say, hey, I can't afford to pay anything, IRS. And you got to prove that as well, right? You're a young guy. I'm assuming you have a 3-year-old. You were playing the market in 2021. You put money into crap stocks. You sound like some 20 or 30 or 20 something or 30 something year old dude, right? I'm assuming. I don't know. You might be 87 years old. I don't know. I'm assuming you're a young guy. And in that situation, I would, even if you qualify for CNC, currently non-collectible status, I would probably rather put you in a PPIA. Here's why. The IRS systemically removes people from CNC status if their income exceeds a certain amount, right? And it was based on, where they're at financially when they went into CNC, and then if their income goes up enough based on their tax return, they will be systemically kicked out of CNC. Okay. There is no such systemic removal from PPIAs, although the IRS is supposed to review PPIAs every couple of years. They manually review CNCs too, right? But our experience, folks, especially younger folks, tend to get kicked out of CNC a lot more frequently than a PPIA. What do I mean by kicked out? I mean, the IRS now believes that the resolution you got in, right, let's say CNC status, the IRS thinks your financial situation has improved since then based on your income increasing, and therefore it wants to take another look at your finances, right? You can get back or / stay in CNC or the PPIA. You just have to give an updated financials. Okay, you might be making $5,000 more a year now, right? Let's say, 3 years from now or whatever. But, you had another child there too. Your household size increased. The IRS is going to allow you to have more expenses against that income. Okay? So that's how that works. There's also the Offer and Compromise program. Offer and Compromise. That is a agreement with the IRS to settle your tax debt for less than you owe. Okay? You're gonna have to show that for only $20,000, basically you can't really own a home, at least not in this market, because the equity in your home is probably in excess of the $20,000, even after the 20% haircut the IRS gives you. So you're gonna have to show that you have little to no equity in assets, and your disposable income is pretty much nothing, right? So that might be a little tough for a young guy who only owes 20 grand, right? If you're saying 200 grand, 2 million, okay, maybe, but then again, I don't know. I don't know your numbers, right? You may be a slam dunk offering compromise candidate. I'm just talking about laws of averages and things like that. If you want more information about all these tax relief options, you're in luck, because I have a video right here in which I go in depth on all the major tax relief options. If you'd like a free consultation with my team at Choice Tax Relief, give us a call, 866-8000-TAX. That's 866-8000-829, or visit us at choicetaxrelief.com. Fill out the form. We will reach out to you. Thanks so much for watching, everybody. See you in the next video. Bye-bye.